No tax on overtime. Maybe. My name is Paul Vasquez with Tax Lab, and you need to become an ethical millionaire. Now, the big, beautiful bill says that there's no tax on overtime, but if you get into the details, you may just find out that there are some limitations. In fact, there are two main limitations that you need to keep in mind on the no tax on overtime. Let's take a look. Here we are in the big, beautiful bill. So we've got, here we go, Section 70202. And we're talking about qualified overtime compensation. And here is our first limitation. The allowed deduction under this section for any taxable year shall, Old English, watch it out, that means they mean business when they're speaking to you like King Arthur, not exceed $12,500. So one thing you need to realize with this is that they're calling this a tax deduction. What does that mean? Well, a tax deduction is going to be reported on your tax return. So you'll still have it on your paycheck, and it's still going to show up as taxable income on your paycheck. And this is partly why, because they're limiting it to $12,500 per year. So if you go over that amount, you don't get that. On top of that, if your income raises to a certain level, you won't get any of it, not even the $12,500. Let's take a look at that. So like in so many of these provisos, they really knock out the wealthy from getting the same type of benefits as the majority or middle class and under, right? Once your personal income exceeds $150,000 or $300,000 for a couple, then for each $1,000 over that, other way around, by $100 for, I had it the right way. So if that is $151,000, that available credit will go down to $12,400. Right? So anytime, if you're single, anytime that goes up by $1,000, that goes down. Your limit of $12,500 will go down by another $100. So they're really knocking out those who make a lot of money. But this is why, another reason why they're not going to be taking not stopping to take this out of the paychecks, because it's less hassle and less having to rewrite the whole system, less costly to everybody overall if this is just taken care of at the individual taxpayer level, because as your salaries and income rises, they don't have to worry about that. Or if you're putting in a tremendous amount of overtime, they're not going to have to worry about it. It comes out on the tax return, and great for us who are in the industry of helping people prepare their taxes. It's more reason why you should maybe have a professional help with this to make sure that it's being done correctly. The softwares might be able to handle all this on their own, but maybe not. AI may help with this, but there's kind of a gap between what AI says and what AI can do right now. So it may not be as grand as you might like, especially for the price that they're charging. And again, like so many others, you must have a valid social security number. If you are married, at least one of the spouses must have a valid social security number. And you're filing a joint tax return. If you're doing marrying filing separately, well, you don't get the advantage. Will this last forever? No, it is not written that this is a permanent moving forward unless new rules come about. Let's take a look at the start and end date. So right here, this is letter G of qualified overtime compensation 225. And so here we've got beginning after December 31st, 2024. So beginning 2025, that means on your 2025 tax return that you file before April 15th, 2026, right? Next year, you file your taxes for 2025. The year's not over till it's over, but you have this whole year for that this will be in effect. Let's see here. There may be an issue with the procedures of how they're actually going to do this on the tax returns, right? So here you've got the Secretary of the Treasury has to modify the procedures on the income tax filings tax year beginning after December 31st, 2025. That's interesting, right? So there might be some ambiguity, or it may be unclear by the time your 2025 tax return is due. Well, I guess that's the very end of 2025, isn't it? So we hope that is the case, that there'll be clear guidelines on how to process that on a 2025 tax return. I'd say this all the time, guys. Just because they pass a law does not mean when it's executed, it's gonna come out the way you think, because there's an art to the execution of how to make that happen. Now, if we scroll up a little bit more, where was it? And there it is, right here, termination. Here's a G under termination. No deduction shall, Old English, all right, be allowed under this section for any taxable year beginning after December 31st, 2028. So that means that if you are getting overtime and that's something that's part of your regular job in after 2028, so in beginning 2029, if whomever is running their campaign can then run on this idea of extending that if it is a concern for enough voters, right? They're creating the controversies that they can then solve by voting for them, right? I'm just, yeah, so that's just me, I guess, on the whole political system, on how voting works. They need something to convince you to vote about. So you'll have that option before those come up next go round. If you want a tax strategy, a tax financial strategy that takes into account the new rules for you and how this is going to function for 2025 moving forward, Lab.tax, click on advisory services and get a free 15-minute introductory call about our comprehensive consult. And that's what gets you that plan. It's about a five-phased program where we really go in depth about where you are. We need to understand where you're starting from so we can plot the right course to making you an ethical millionaire. I wish you guys all the success. Good luck out there.